Donald Trump has just threatened a 100% tariff hike on China. Now, although Trump has already backed off from this threat, there is a reason for why it's triggering a panic underneath the surface. A 100% tariff hike would lift the effective tariff rate on Chinese goods coming into the US to around 140%. This is a level that completely shuts down trade, as it essentially makes any business importing goods into the US from China unprofitable. This kind of scenario would be enough to trigger an economic depression. Now, investors know that Trump is extremely unlikely to follow through on this threat, and that this is part of a broader negotiation. This is why we're not seeing stocks plummet in a straight line down right now. But what this threat does do is it fragilizes the relationship between China and the US even further and lays the foundation for something like that to actually happen. Keep in mind, China is in a much stronger position to play tough when it comes to trade today. It has already seen its exports to the US drop by 27% since the start of the trade war, but on the flip side, it has seen its non-US exports grow significantly to completely offset the drop in exports to the US. Altogether, Chinese exports have actually grown nicely over the course of the last year by 8%, despite the significant tariff hit from the US. What this represents is a gradual misalignment and growing independence between the US's trade interests and Chinese trade interests. Eventually, if these interests have diverged enough, Trump or another president could be forced one way or another to actually follow through on a policy that would completely sever ties between the US and China. The mere fact that this is on the table represents a clear deterioration in global trade ties that almost certainly will have an impact on economic growth at some point in the future. The reason that the stock market is not reacting to this right now is because corporate profits are at all-time highs right now.